Last rate rise of the year, the 8th consecutive one. Our political editor, Andrew Clennell, is with me. Andrew, this obviously a difficult bit of news for a lot of mortgage holders heading into Christmas. Unfortunately, the message is there are more to come next year.
Yeah, it's no good at all. And I think what's interesting here is the amount the Reserve Bank Governor Philip Lowe mentions global factors, and so does Jim Chalmers. It's almost as if to say we can make all these rate rises, but it's not going to stop inflation, so we have to keep making them, which is the real concern for householders and the Australian economy as a whole. So this is what Philip Lowe said in his statement. He said inflation in Australia is too high at 6.9% over the year to October. Global factors explain much of this high inflation, but strong domestic demand relative to the ability of the economy to meet that demand is also playing a role. He went on in his statement, returning inflation to target requires a more sustainable balance between demand and supply, but then says a further increase in inflation is expected over the months ahead, with inflation forecast to peak at around 8% over the year to the December quarter. We know the last figure was 6.9%, last annual figure, and before that 7.3%. And then he says, here's the kicker, the board expects to increase interest rates further over the period ahead, but adds it's not on a preset course. It is closely monitoring the global economy, household spending and wage and price setting behaviour. The wage bit's interesting given the government's IR bill. Then he says the board remains resolute in its determination to return inflation to target and will do what is necessary to achieve that. Do whatever is necessary. Well, if you've got a home loan or a business loan, you don't want to hear that, do you? Here's Jim Chalmers admitting that it's not quite the Christmas present people wanted.
And I think this is the Christmas present that no Australian homeowner wanted. But the reality is we've now had 8 consecutive interest rate rises, which began before the election in May.
So here's Jim Chalmers with Kieran earlier talking about there are some global factors we just can't control in relation to this inflation and interest rate problem, but we're working on what we can control.
We are hostage to a number of developments we don't control, whether it's the war in Ukraine, China and COVID, US, UK and Europe, whether it's the impact of these rate rises determined independently by the Reserve Bank, and whether it's harsh weather events and natural disasters. There's a lot that we can't control in our economy.
So the Reserve Bank Governor warned about, I guess, a wage price spiral. Jim Chalmers was having none of that. When Kieran asked him earlier, he essentially said, no, there's not a problem with wages causing inflation. There's not going to be either.
Well, first of all, you've got to be really careful about one measure at one point in time. Obviously, the trend over a much longer period of time has been wage stagnation, even as profits have grown considerably. You know, there's been a bit of a decoupling in unwelcome ways between profit growth and wages growth, and we are concerned about that. We've made that clear for some time. But we are seeing, I think, a whiff of wages growth in our economy.